Hey guys, hope you and the families are doing well. In this video, I'm going to teach you the order entry method technique known as opening range breakouts. Now, a couple of these stocks I'm long at the time of filming, like SMCI and LYFT. A couple others I was targeting but didn't get filled, like Coinbase and AMD. Then I'll take you through a couple of others that were earnings gappers and news gappers, like an Uber and NVIDIA. So this video is going to be split into two main parts. I'm going to teach you the opening range entry method technique on your kind of standard pivot breakouts, which you'll be more familiar with, and then I'll teach you how to apply it on stocks that are gapping up. Potentially that's news or potentially that's earnings. So we're really going to split this video into two main parts. I'm going to help you to understand this by splitting the charts in two. You're going to see the daily chart on the left hand side, then we're going to work bar by bar on an intraday time frame. So we're going to be looking at these opening range breakout trades on the 1 minute chart, the 5 minute chart, 15 minute chart, the 30 minute chart, so you can understand what it is you're looking for, how to enter the positions as well. We're really going to break it down in terms of the trade from an identification standpoint, controlling risk mitigation, and then thinking about the optimizing profits. Market Surge are today's video sponsor. These are the updated Market Smith charts. They've added some new and exciting features. If you'd like to have a discounted trial, then there is a link in the comments and the description below. So Coinbase is going to be our first example. So we've got the daily chart on the left, then we've got the 1 minute chart on the right, where we're going to be utilizing TradingView's bar by bar replay function, so I can show you in real time what it is you want to be thinking about, certain things to be looking out for as well from a supply and demand perspective. What's the price action? What is the volume? What is the relationship between the two? What does that tell you about how much buying power, how much demand is showing up for the stock? It's also a great way, the TradingView bar by bar replay function, to practice these type of entries in a very deliberate manner. What I will say at the start of this video, for me, there's two main order entry methods. That's going to be buy stop limit orders, which I was employing myself here for Coinbase and I didn't get filled. The other one, as we're going to talk about in this video, is opening range breakouts. If you want to learn more about buy stop limit orders, I talk about those in the blueprint video, which is free for you on the YouTube channel. So Coinbase here, okay, so crypto stocks were showing a lot of relative strength. Bitcoin was rocking and rolling as well. Coinbase here building a cup and a handle, then what I call a shakeout demand tail off the 10-day EMA. So you can see here the high of the shakeout demand tail is $170, and Coinbase in the first 1 minute breaks through the high of the $170. So again, last time I'm going to kind of refer to it, I was using a buy stop limit order, so the limit then defining the risk. I'm going to show you this on AMD to talk about the pros and cons of opening range breakouts versus buy stop limit orders. I didn't get filled in it, okay, but if you were targeting an opening range breakout, these are some of the things that you want to be looking out for. Okay, so now what we're going to do is we're just going to zoom in. So this is the first 1 minute candlestick for Coinbase, okay, so it's breaking out here. Then what is the relationship? What are we seeing here from a supply and demand perspective? What do you infer from this candlestick and this volume? Now, this is what I call bullish synchronicity. There is a synchronicity between the positive price action. It's a very widespread relative candlestick. You can see that on a relative basis. Just look at the prior bars, right? You can see like that is a wide range candlestick. And then what is the volume? Well, the volume is confirming the positive price action, hence bullish synchronicity. So it's a widespread candlestick, gap up, so the prior close is here, okay, in terms of the closing price around 165. The high of the bar was 170, so it gaps up, opens near the low of that 1 minute candlestick, little shakeout demand tail, pushes up, moves through the high of the previous day and closes strong. There is a lot of buying here, okay, there is a lot of demand. This is what you want to see when a stock is breaking out. You do not want to be the only one looking at it when a stock is breaking out. You need other traders, other speculators, other market operators to be buying after you, to pay a higher price than what it is you paid if the stock is going to be profitable. So you want to be targeting stocks, okay, that you think, as you plan and prepare for the next session, or you see something in the pre-market, that it's going to be on other traders' radars as well. You need other market participants to be buying after you. So this is the identification part in terms of the type of stock that you're looking to trade is very important. So for me, that's either going to be a TML type stocks, that's your O'Neill type stocks, true market leader, big earnings, big sales, big estimates, global product, institutional sponsorship, great story, new revolutionary technology such as AI or whatever it may be, or a momentum leader type stock. That's going to be a stock that has a very high 20-day ADR percentage. We'll talk about that in a little bit. Very good liquidity as well, so a high dollar volume, and ideally has a history of being able to trend pretty hard as well. Potentially there's a high short interest in those kind of stocks too. Or it could be a group theme leader. So at this moment in time, when I was targeting Coinbase, a lot of crypto stocks, so crypto being in the kind of theme, was showing a lot of relative strength. So Coinbase for me actually ticked all three categories. It's a TML, it's a momentum leader given the ADR percentage and also the liquidity of the stock, plus it's a group theme leader. So it's like tier one in terms of all of those. So you need to think about the type of stocks that you're trading as well. But anyway, okay, first 1 minute candlestick, what do we see Coinbase is moving through the high of the prior session. Okay, we can zoom that in on here. Now I know you can see what happens there afterwards. I'm really just trying to make this a detailed tutorial so you understand the type of things you're looking for. So okay, Coinbase is gapping up and breaking out here. So then what do you do? How do you target it? So this is going to be an opening range breakout trade on the 1 minute chart. So I'm going to show you multiple time frames as we go. What, 1 minute, 5 minute, 30-minute chart, 15-minute chart. So you can see these ORB, so opening range breakouts, across multiple time frames. Okay, so sometimes you can kind of target it, you get knocked out on one time frame, it sets then on the higher time frame, so you get knocked out on the 1 minute chart, it sets on the 5 minute chart, or you get knocked out on the 5 minute chart, it resets on the 15-minute chart. Okay, it's not perfect. I'm going to show you a couple of times where it wouldn't have worked, such as Uber and PLTR, right? But what I'm going to do here, okay, I'm going to put the fib retracement tool on it. Okay, because then we're going to talk about the risk mitigation side of things as well. So this is the identification. We kind of spoke about it in here. So we've identified the trade. Okay, it's beginning to go. Now, obviously, if you have a 9-to-5 job or something like that and you can't be looking at the screen when the market is opening, this probably isn't going to be the order entry method technique for you. Buy stop limit orders may be more preferable for you. You're going to have to decide that. You're all big boys and girls, right? But this here is going to require you to be in your screen, like looking at your screen, at your computer, okay, when they start going. Certainly if you're using like the 1 minute chart for an ORB or the 5 minute chart, okay, does that fit your personality? Does that fit your lifestyle? Maybe it does, maybe it doesn't. You've got to decide that for yourself, okay? So anyway, Uber is breaking out here. I'm going to now remove this 170 level. So gaps up, strong bar, a lot of demand coming through. So let's just take a reading of the risk here, okay? So if we were to take a look here, the initial stop loss, if you are targeting it through the high, and as I said, you got to be pretty darn quicker if you're doing an ORB on the 1 minute chart. The initial risk is going to be assuming perfect execution, which is going to be rare, but for the purpose of this video, so it's easier and it kind of flows better, we're going to assume perfect execution. It's going to be $3.31 per share. So that's 17171 minus 16840 is going to get you to your $3.31 risk per share. In terms of percentages, that's 1.93%. Now, importantly, we need to look at the 20-day ADR percentage at this time. The 20-day ADR percentage, which is the average daily range percentage, is 7.09%. Now, ideally, you'd like your initial stop loss to be somewhere between half and 2/3 versus that, but the less the better, okay? The less the better. The tighter the risk control, the better. But using the 20-day ADR percentage as an initial risk metric is useful. So I like percentages. If you want to use ATR, which will give you a dollar figure or a cent figure instead, that's fine. My brain likes percentages better, so I use the 20-day ADR percentage, okay? So half to 2/3 is a good initial risk metric. So we're thinking about the identification, we're thinking about the controlling risk. So it is 1.93% off an ADR of 7.09% favorable. Yes, it's very, very favorable indeed in terms of that risk metric. So that's how we're thinking about controlling the risk. Now we're going to play this one forward. Now I didn't get filled on this with buy stop limit order, and I'm a little bit peeved about it. So your entry, okay, is going to be here. So we'll do this, okay? Your entry is going to be here. Now you're going to see in a minute, okay, let's just say your entry is perfect. Now, it's not going to be perfect, okay? You're going to get slippage, you're going to be a little bit slower if you're then using, say, a market order or something to buy it through there. Coinbase is relatively liquid stock. Again, if you're trading like a biotech stock on an ORB that's got like a market cap of 50 million or 100 million, you probably don't want to use market orders because I suppose it's going to be all over the place. But we're talking about Coinbase, very liquid stock. I think the 50-day average volume on this one is over $1 billion a day, okay? It's pretty darn liquid stock, okay? So this one here, your entry is going to be here, assuming perfect execution. Now, what you're going to see is we're going to have our free rolling targets up here. Okay, we're going to have our free rolling targets. So again, I'm going to talk to you through the 4 phases of a trade, which is number 1, identify, number 2, control, number 3, mitigate. So how do we now position ourselves risk-free on the trade? And then we move into the optimizing profits. But for me, I like to get to risk-free on the trade when I am trading. Why? Because when you are risk-free on the trade, it tends to create a more carefree state of mind, and you can manage the position better because you're not emotional. You're not emotional about it. Okay, you free roll the trade. Okay, if I get knocked out of my stop lot, I'm break even. Who cares? Okay, it gets you to that carefree state of mind. So what you're going to see here, okay, if I now put this figure here, we're just going to do the first one at 1 times, okay? So let's do this here. I did it perfectly that time there, okay? So our free roll target is now 17502. Now you may want to think, it's a round number just above 175. Maybe I'll just free roll into that. But for the purpose here, so you understand it, okay? We have risk on the trade of $3.31. Our free roll target is, if we're selling half of our position, $3.31. So if we are able to sell, let's say we use a sell limit order here. So we put a sell limit order for half the position at 175.02 like this. If we were to then sell half of our position at this level, that means on half of the position we've just locked in a gain of $3.31. we still have half of our position that we didn't sell with a stop at 168.40 on the low of the day. Maybe you want to go kind of a penny off the low of the day, which would be $3.31. So the profit cancels out the risk. So you are risk-free on the trade. So risk-free generally creates a carefree state of mind. You may be able to manage the position better, okay? So that's where I'm then trying to get myself to. Identify, control, mitigate, then we move into the optimization. And then that can be looking back at the character of the stock and go, okay, when this stock wants to trend, how does it like to trend? Does it like to stay above its 10-day, its 21-day, its 50-day? What is the context of the type of base it's coming out? Is it coming out of a 6-month-long base or a 6-week base? You may be wanting to manage it better, or differently, I should say. But understanding how does the stock trend? What's going to be the best way to optimize profits? Because all stocks are not created equal. Stocks are very different. Some stocks are going to love trending along their 10-day EMA. Sometimes the 10-day is going to be too quick and the 21 is going to be more effective. What you've got to do in those situations is look back and study the character of the stock. Okay, look at similar breakouts from continuation bases, flags, pennants, wedges, cup and handles, Davis boxes, VCPs, whatever you want to call it. Pull up the history of the pull up the chart. Like, go and look and go, okay, the stock loves just riding this 10-day. 10-day is going to be really choppy. Actually, it says 21-day EMA. And what you may be able to do as well is get a feel for how far this stock may go. Okay, so then we can think about the initial risk that you're taking relative to the potential reward of the stock. If you look back at 5 previous breakouts for Coinbase and you go, before it closes below its 10-day, it only goes up 5%. Then you probably don't want to be trading that stock. But if you go, right, I've looked at 5 previous breakouts from similar setups to this, and actually the average gain across those 5 breakouts is, let's say, 20%. So now your realistic reward that you think based on the character of the stock, nothing else, the character of the stock, not what someone's saying on Twitter, not what someone's saying on CNBC, not a broker price target, the character of the stock. You're going, okay, I'm taking 2% initial risk off an ADR of say 7%. And I also think the realistic potential for Coinbase before it closes below the 10-day EMA is 20%. Well, now your reward is potentially 10 times that of your initial risk. Okay, they're the kind of ones we want to be playing in, right? So let's play this forward, okay? So Coinbase is obviously the 1 minute chart. Okay, starts going. So that's then in this bar here. So around about, what's that, 7 minutes into the trade, 1, 2, 3, 4, 5, 6 or kind of 7, 8 minutes into the trade. Okay, you've now sold half of the position, you free rolled it. Okay, you sold half of the position, you free rolled it, you still got half back that you're now risk free. So the benefit of that is if Coinbase comes back down here to 168.40, now it doesn't, you can kind of see it moves up. Appreciate there's a lot of things going on that chart now. Okay, but if Coinbase were to now roll over and U-turn, which does happen if you've been trading more than 2 weeks, you'll know that. Okay, if it rolls back over like this, you're not going to be stopped with a 1.9%. You're going to get a little bit of slippage probably, but circa not a 2% stop loss. You're just going to be break even on the trade. Now, maybe risk mitigation suits you. Maybe it doesn't suit you. You hear Mark Douglas talk a lot about this, actually getting himself to risk-free, to break even. Why? Because risk-free helps create psychologically a carefree state of mind. Great. So what I like to do in my trading is get in with a nice tight stop, hit it pretty hard, free roll the trade, then sit and let the stock trend and just stay out the way of it. Like, stay out the way of it. Oh no, okay, I'm trying to use the 10-day, 21-day, maybe it's a combination of moving averages. Okay, if it starts getting extended, I'll be taking some off there. If it kind of extended from the 10-day, I'll be choking part of the position off, all of the position off, depends how climactic it may be. But then I can kind of get in, hit it, free roll it, sit back, and just let the stock do whatever the stock's going to do. Okay, I don't then have to interfere, okay, because all I can then do, I can't then influence the price of the stock. Okay, I'm not going to be buying anymore. All I can do is kind of cheer it on from the sidelines. So the stock doesn't know who I am, it doesn't care who I am. So that's why you've just got to be kind of unemotional, just rational, objective, and go, okay, I realistically think the stock may be able to go up X%. I'm going to see if it does that, and I'm going to be on the lookout for danger signs. Potentially it resets and I can be adding back to the position as well. So just really listening to what it is the stock is telling you to do, what it is the market is telling you to do. So that's the ORB on the 1 minute chart for Coinbase. Okay, now let's go for LYFT. So this here is a stock that I'm in at the time of filming this one. I actually got filled on this one. Coinbase pissed me off, I didn't get filled on it, but it is what it is. Okay, so LYFT is building kind of a cup and handle there. It powers out here on the earnings. Okay, look at the huge volume coming through on the earnings, and again it's that bullish synchronicity point, right, like I was talking about with Coinbase on the 1 minute chart, applicable on the higher time frame here. Okay, big gap up, opens on the low of the bar, pushes up here, strong bars. Okay, lots of volume coming. This ain't retail traders. This is the bigger boys and girls doing that. So I'm then taking it. This is what I call a shakeout demand tail. Okay, if you watch the blueprint video on the channel, so it's shakeout demand tail around the 10-day EMA, and it's a confluence of testing the previous highs, basically perfectly. Okay, so you get this kind of breakout here, breakout, pullback, test, huge volume coming through on the earnings. So the stock's just pulling back it. So I'm targeting it through the high here. Okay. Now, invariably, I will use a buy stop limit order in my trade. That's my preferred entry method technique, but I'm teaching you about opening range breakouts in this video here, okay? So let's just zoom in here like this, and let me maybe pull it across like that so you can kind of see what it was looking like here, okay? So it's pulling back down. Now I'm going to show you an ORB on the 30-minute chart, okay? So ORB on the 30-minute chart. So this is the first 30-minute candlestick. It's breaking out right now. It's not as strong as we were talking about with a Coinbase. The volume is okay, the candlestick is pretty good. There's a shakeout demand tail indicating there's a bit of hesitation here, but it's a relatively strong close. So on the 30-minute chart, it's now breaking out. Here's a textbook shakeout demand tail on the 30-minute chart, by the way. There was some good buying into the prior close as well. So for me, when I'm kind of studying and I'm using multiple time frame analysis for what are the stocks I want to be targeting, shakeout demand tail, first 30-minute bar, and then a strong close in the last 30 minutes. Who's going to be most active in the first hour and the last hour of the session? That's the bigger boys and girls, okay? So I like what I'm seeing there. So anyway, 30-minute chart, it's beginning to break out through the high of the prior day, which is going to kind of be our trigger where we're looking for it to move through. So what I'm going to do is just put the fib tool on it, okay? Now we can actually see everything on here if I just zoom it in like this. Okay, so if you're then targeting it through the high there, so this would be a 30-minute ORB, you're then looking for it to break through 1618. So your initial risk on the trade is going to be 47 cents. So that equates to 2.89%. So is 2.89% versus a 20-day ADR percentage of 6.75% favorable? I'd say it's favorable, okay? It's less than half to 2/3, right? It's favorable. It's a favorable risk. We can go back, we can study the stock. Okay, how far do we think this is going to move? Do we think it could go maybe 30% before it starts closing below 10-day 21 days? So potentially we've got kind of 10 to 1 there in terms of initial risk relative to potential reward. Now obviously if you're mitigating risk, you're not going to get that kind of entire reward wipe because you're taking part of your position off. But for me, that's a nice trade-off, okay? I like to get risk free on the position. I want to get to the position where the stock can do no damage on my account equity line, okay? That's where I'm trying to get to. I don't want the stock, I don't want it to cause any damage. I don't want to lose money, okay? Warren Buffett, rule number 1, don't lose money. Rule number 2, see rule number 1. It's really that simple. So here we go. We're then going to target it through 1618 like this, okay? So next bar, it moves through. So the entry is going to be here. Are you going to get slippage? Yes, you're going to get slippage. You're probably not going to buy it that perfectly at 1618, but for the purpose of the video, let's just imagine. And then your initial stop loss is here at 1571, okay? So what we could then do here, we'll do half of our position again because the maths is nice and easy. If you see this green line up here, that is selling 1/3 of the position, 1/3 of the position at 2 times where the stop loss line is. Now, what I could do here is I could move the stop loss like this. So I could push the stop loss up, and then that brings the free roll targets down. That's called active risk mitigation. I'm not going to go into that in this video. I'm probably going to lose a few of you, okay? But here we go. What we can then do here is we can put a sell limit order for half at that level, at 1665, okay? So if we hit that level there, that'll be selling at 47 cents gain, okay? Like that. Like that. So our risk on the trade is 47 cents. If we hit that level, we take half of the position off if we want to free roll the trade. Now, if it then turns around, you're potentially going to get some slippage down here. So again, it's hypothetical, okay? Can you get gap downs? Can you get slippages? Absolutely you can, okay? But the entry is through the high there, okay? Through the high there, okay? So then we're looking to take half of the position off at 1665, okay? Then we watch. This is the half an hour chart here. And then that session, we are not able to free roll the trade. It's next session, it gaps up there, so then you would have actually been able to sell a little bit more up there. And if I just show you there, that's that gap that you had coming through in there. I think it may have been an analyst upgrade or something like that. They're doing some stuff with DoorDash. I'm currently long as well. But that there is the ORB on a 30-minute chart. So kind of the process is the same. It's just a different time frame, right? Let me go and show you SMCI. So this is one that I'm long at the time of filming. I'm going to show you this one on the 15-minute chart. So I was targeting it through the high of the 29th of February 2024. So the high of that bar there was 890.52. I was using a buy stop limit order to do this. But what do we see here? Well, if we look at the first 15-minute chart of the prior session, good bar, right? It's what we spoke about on Coinbase, bullish synchronicity. The prior closes here at about 816, gaps up, opens on the low, pushes up. Look at the good volume coming through, okay? High relative volume. The importance here cannot be understated as well. Gap up, open on the low of the bar. See that gap? Open on the low of the bar and pushes for the first 15 minutes. Now, this is applicable whether it's 1 minute, 5 minute, 15 minute, hourly, daily, whatever it may be, okay? When a stock gaps on the open, and the open is the low of the bar. See that? The open is the low of the bar. So it gapped up and then it just pushed immediately. What does that tell you about the presence of demand? It tells you it's instant. It's immediate. That's really, really good to see when you think about it from a supply and demand perspective. So the stock gaps for the first 15-minute bar, opens on the low, pushes up. really good to see. Intra-session, shake out demand tails, shake out demand tails, shake out demand tails, okay, close. Then this bar here, so it's breaking through the high. So here, gaps up, opens on the low, pushes up and goes. So if you were going to use an ORB, an opening range breakout here, okay, how would you then be doing it? On the 15-minute chart. Again, you can do it on the 1-minute chart, 5-minute chart, 10-minute chart, the 7-minute chart, the 1-hour chart, the 29-minute, whatever you want to do, okay? Whatever you want to do. Go back, study them, see what time frame is best for you. So how you'd be looking at it like this, okay, is then targeting it. So an ORB on the 15-minute chart for SMCI here will be 909.90, and initial stop loss placed on the low of this bar, 88100, but you'd probably go a cent below, okay? So a cent below the low of the bar, maybe you want to go a little bit lower or something like that. It's up to you, decide on the risk. So what would our initial risk be there, okay? Well, our initial risk on the trade, this is a high price stock, so it's going to be $28.90 risk per share, which is going to equate to 3.18%, assuming perfect execution and no slippage on the stop loss. So 3.18%. Now, is that favorable versus the ADR percentage at this time of 10.69%? Yes, it's around about a third. And as I said earlier, somewhere between half and 2/3 is good. Anything over 5%, though, you really got to think about it, okay? You start going above 5%, the risk versus reward starts getting out of whack in terms of losses working geometrically against you, so you want to keep it nice and tight. My average stop loss for this year so far is 1.74%, okay, keeping the risk nice and tight. So this is how you'd be looking at it. So then you target it through 909.90. Okay, it doesn't go, it goes there. Okay, so there is your entry as it starts moving through. Good bar, bullish synchronicity. Okay, volume is popping up, widespread candlestick, opens on the low, pushes through. So this here is going to be your entry at 909.90 like that. Now, are you going to get some slippage? Going to get some slippage, okay? We're just talking about it in terms of this YouTube video, so it just flows a little bit better, okay? So again, same process, right? Now, could we be selling 1/3 of our position at 2 times our initial stop loss? We could, because if I move it up to like this, you'll see that if we go here, and let me just set them up for you. So if we go 969.70 like that, you'll see that if you were to times 28.90 by 2, you'd get to 57.80. So that's where you can sell 1/3 of your position at 2 times your initial stop loss. Or you could be moving it up. So watch, as this stock here starts to break out, what we could do is go, well, we can now move our stop loss up from 881 to, say, the low of this bar here. So if we just drag this up, see how our free roll targets come down. So we can push the initial stop loss up to begin mitigating the risk if you want to. That brings your free roll targets again down, okay? The third part of the trade, risk mitigation, can be active. It can be inactive as you like, or as dull as you like, or you don't have to do it. For me, I like doing it. I actively mitigate the risk, yeah? So here, if we then move this up, so this is a stock that I'm currently long at the time of filming, if I were to move this up and we go 938.80, you'll see what I mean about then setting the free roll target. So if we were looking to sell half of the position off of the initial stop loss, then we're not looking to move the initial stop loss up. We're going to be at, our free roll target is going to be 938.80. Why? Because that's going to be $28.90, 3.18%. That's the same with our risk. So again, selling half of the position at that profit then cancels out the remaining risk. So if price pushes up like this and then U-turns, which happens, you're going to see that on PLTR and Uber a little bit later. So if price were to push up and then roll back over like this, so it kind of U-turns, okay, you're not going to be stopped out here with a 28.90 loss per share. Okay, you're going to be at around about break even. Maybe you want to do that, maybe you don't want to do that. Okay, so that is the ORB on the 15-minute chart. Again, it's not overly complicated. Okay, kind of ebbs and flows there. Can't remember if it goes that session or it gaps up the next session. I think it was then the inclusion of the S&P 500. There you go, put it up here. Then you get a nice big gap. So was it nice to wake up to that gap? Yeah, it was nice to wake up to that gap. Did I know that SMCI was going to be included in the S&P 500? I didn't know that, okay? But you create your own luck by looking for the highest quality stocks, forming what you think are asymmetric reverse reward trades. So then the free roll is then up here, okay? Nice little pop on that one. So AMD, let me take you through this one. So now I'm going to talk to you about the pros and cons of a buy stop limit order versus an opening range breakout. So with my trading, I like using a buy stop limit order. I think I can define the risk better. It just suits my personality more so as well. But let me take you through some of the pros and cons here, right? So I was targeting AMD through the high. Any of you who are good traders will know that that is a ridiculously good setup. Like that's at least not in my book 9 out of 10. It's a ridiculously good setup. So the way I was targeting AMD is I was using a buy stop limit order. So I was looking to buy through the session high of 176.84 with a limit at 177.72. Now why was I doing that? Because a buy stop limit order, the limit helps define the risk. Okay, so the limit helps define the risk. So I know if I get kind of perfect execution on AMD, my initial stop loss is going to be circa 1.84%. If I get filled at the limit, so I'm defining the maximum amount I'm willing to pay for any shares. So by defining the maximum amount I'm willing to pay with any shares with a buy stop limit order, I know my maximum risk. I'm defining my maximum risk, and I can plan the trade out ahead of time more effectively. Obviously, if you're doing an ORB, it's a little bit more on the fly, okay? You've got to be adapting to information as it comes. You've got to be looking at your screen as well, because things move quickly. Certainly if you're doing an ORB off the 1 minute chart and the 5 minute chart, okay? So I know my maximum risk. If I get filled up here, my maximum risk on the trade is going to be circa 2.3%. So I know my risk on the trade is going to be somewhere between about 1.8% and 2.3%. Why? Because of the limit. I'm looking to buy within this range here, basically between 176 and 177. Okay, now what can happen is you can identify a ridiculously good setup like AMD, but it gaps. So it gaps up here, okay? So this is the first 1 minute candlestick. It gaps. And it never pulls back. So I didn't get filled on this one. Now, had I used an ORB, would I have got filled? I would have got filled if I was doing it, say, off the 1 minute chart or the 5 minute chart. So there are pros and cons to things. Okay. So with a ORB, you're gonna have to be, as I said, staring at your screen. You're gonna have to be there. Okay, you can't be in a meeting on a phone call and be then like, you're gonna have to be there, you're gonna have to be focused, you're gonna have to be switched on. Maybe that suits your personality and your lifestyle and your kind of commitment. Maybe it does, maybe it doesn't. Okay, you got to decide that for yourself. You're all big boys and girls. So AMD here. Now this stock gaps. So I'm going to now just delete these drawings. So this stock gaps above the prior session's high. So let me just like put this in with a blue line. So it gaps up here. Now the open is around 179.80. Okay, something like this. Let's actually put it in. Okay, so the open is 179.78. So remember what I said on, I can't remember the stock now. Was it SMCI? I think it was SMCI. Yeah, it was SMCI on the 15-minute chart, wasn't it? SMCI gapped on the 15-minute chart. Okay, remember this bar here that we were talking about. It gapped on the 15-minute chart, this bar here, okay, and pushed up, okay, and the open was the low of the bar. It's the same concept here with the 1 minute chart. AMD gaps from this ridiculously good setup, like ridiculously good setup. It gaps, opens on the low on the 1 minute chart and pushes up. What does that tell you about the immediate presence of demand? Or what does that tell you about the presence of demand? It's immediate. There is buying as soon as AMD opened. Like the floodgates have opened. Okay, traders are lapping this up, traders are buying this. You can visually see it, right? You can see it. So this is then a 1 minute ORB on AMD. So it gaps like this from this very, very, very good setup, trying to come out at the high of this base here. When we speak about earnings gaps, we're going to look at AVAV that builds a big base, okay? But what AMD here does, it gaps, pushes up high relative volume coming through, so you get bullish synchronicity. So the price action is being confirmed by the high relative volume. How do you know it's high relative volume? Okay, look at the black line, which is the 30-bar average relative to anything previously. It ain't rocket science. You can apply a little bit of common sense. If you're super speedy at maths as well, you could work out the dollar volume, do around about 1 million times by $180. Okay, you can work out the dollar volume pretty darn quick. Okay, there's a lot of buying in the first 1 minute. Should I show you that just to illustrate the point? Okay, you don't have to be a rocket scientist. You don't have to use like volume bars, relative volume. Like it's all nonsense. Okay, just apply some common sense. It's not too difficult. So looking at this here, okay, 1.1 million shares. 1.1 million shares, and let's just take an average there of $180 for that 1 minute bar. So the dollar volume traded in the first 1 minute for AMD is circa $198 million worth of stock is traded. That's the dollar volume on the first 1 minute. Does it look like buying or selling? Who won? Did demand win or did supply win? Demand won, clearly. If you don't think that, you're looking at something else, okay? Nearly $200 million worth of stock is exchanged and hit. Gap up from this ridiculously good setup, opens on the low, pushes up, closes strong. There's a shed ton of buying. This is what buying looks like. Like visually, when someone says demand, like visually is tangible. You can see it. You can see demand. You can see supply if you know what it is you're looking for. Okay, you're trying to make the invisible visible to yourself. Okay, train yourself to see these concepts. So then we go and look at, say, the initial risk here. Is $1.02, which is circa 0.56% initial stop loss, favorable? Well, let's take a look at it versus the 20-day ADR percentage for AMD, 4.06%. It's around about an eighth. Is that favorable? It's around about 7. Is that favorable? Very favorable. Is 0.5% initial stop loss in a leading stock that has a history of being able to trend well, and you're going in with like 0.5 cent stop, $1 stop. That favorable trade? Yes. This is the point. Am I peeved that it kind of gapped and I didn't get filled on my buy stop limit order? Yeah, but this is then the RB trade. So it's a really good one to talk about, but also the pros and cons as well, right? Because if I show you, say like you're going to see some losing trades. Okay, you may have watched up to this video and think like ORBs are the holy grail. They're not the holy grail. Okay, every order entry method technique has pros and cons. You need to decide upon the pros and cons, decide which one fits your personality, your kind of commitments as well during the day as well. Can you stare at the screen while these things are happening? How quickly can you adapt to new information? So the rate of change in which you can adapt if you're trading ORBs is going to be important. Okay, important consideration for you. So this here, okay. So with AMD, your free roll target is then going to be right here. Let me see if I can get it without adjusting it. I'm going to have to go adjust it. So down 1 cent like this. Okay. So remember, if you then want to free roll the trade, your free roll target, if you want to take half the position off, is going to be 181.82. Why? Because then you're selling half of your position at $1.02 gain, and your remaining shares, so half of your position, has a stop loss with a $1.02, $1.02 risk. So they just cancel each other out like that. Okay. Now, because of how quick AMD is, we may be able to free roll this one pretty darn quickly. So this is going to be your entry here. Okay. Let's say your entry, you get perfect execution is 180.80. Okay. And then 4 minutes later, 3-4 minutes later, you've been able to free roll the trade. So that there is your free roll by selling half the position. Now maybe you want to wait until it kind of hits 1/3 at 2 times, so then you've still got 2/3 of your position instead of half of your position. But there, you've been able to get in, hit it hard because of the very tight stop loss as well, and then just sit and let the trend play out. Just let the trend play out. Let the stock then do whatever the stock wants to do, okay? Have kind of a view in terms of, okay, optimizing the profits. I've worked through the trade here, okay, identify, control, mitigate. I'm now into the optimization phase of the trade, okay? What are the moving averages that I'm looking to use as trading stops? Is it the 10-day? Is it the 21-day? Is it a combination of those? Is it the 50-day? Am I keeping a little bit back for the 50-day? Have a plan and then just let the stock trend like that. So that is the ORB on the 1 minute chart like this. So what we've spoken about there, okay, is some of the ones that are kind of moving through pivots. Now we're going to go into some gap ups. So I'm going to show you PLTR, AVAV, NVDA, and also Uber as well. So PLTR, okay, this one here on the daily chart, you're going to see it actually gaps up. Okay, opens here, sells off, and then closes strong. There's kind of like a big shakeout to mount out. PLTR, Harmar, great reaction to the earnings, 52-week highs, yada yada yada. It just needs to kind of tighten up a little bit. But this is the 5 minute chart for PLTR. Okay, so the prior high is here. So I wasn't targeting this one on this session. I felt like it needed a little bit more work. Okay, but 24.41. So the stock's gapping up. Okay, you can see that. Now, if you think about demand and you think about supply, and we've been talking about bullish synchronicity, this is bearish synchronicity. Okay, this is showing that this gap up is being sold into. So if you think about like the candlestick that we saw for AMD on the 1 minute chart, ridiculously good candlestick for all the reasons we discussed. PLTR is basically the inverse to that. Okay, so the stock gaps, okay, the stock gaps, opens at 25.76 ish, okay, tries to go, this is called a supply shoot, price tried to go, gets slammed back down, okay, and then it closes weak on the low of the 5 minute bar, and it's very high relative volume. Okay, let's get our calculator out again, so just so I can show you the dollar figures. So let's just take an average. It's about 10 million shares traded on this bar, and let's say the average price, let's go mid-range of the bar, 25.50. Okay, so times that by 25.50, the dollar volume in that first 5 minutes is around about $250 million. $250 million worth of shares are traded on that bar. Does it look like institutions are absolutely rushing out to buy this? Or does it look like they're selling into the gap up? What do you think? What do you infer from this bar and the interrelatedness with price? And it's also running into the base high. So is this bar looking as good? So when you're thinking about an ORB, not all ORBs are created equal. Not all setups are created equal. When you break it down and you're looking at this and you're going, okay, I'm not seeing what I'd like to see in terms of a lot of buying coming through for the stock. This looks different to what we've been looking at with Coin, with LYFT, with SMCI, with AMD. Okay, you're getting a sense here of what our institution's doing very early on in the session. Okay, setting the tone a little bit. Now, if you were going to target this one through the high, same process, right? So we're here, and now we're bringing it down. So our stop loss would then be here at 25.16, probably just a cent below or something like this. Then it starts to go here, okay? So your entry is going to be here at 25.98. You're going to get some slippage. I appreciate that, okay? It's just so these videos flow. And then your initial risk on the trade is going to be 82 cents, which equates to 3.16%. Favorable versus the ADR percentage, yeah, pretty favorable. You'd say around about 2/3 or so, isn't it? PLTR has history of being able to run pretty hard as well, so yeah, it's kind of okay, right? Now the stock does kind of like reset here, and then it does push through the high of the day. But we spoke about that first 5-minute candlestick, not looking great from a supply and demand perspective relative to other ones we've looked at, right? So anyway, I just want to show you these because not all opening range breakout trades are going to work. Okay, you need to be aware of that. Okay, you definitely need to be aware of that. That's why risk management is very important, which I've been putting in a heavy emphasis on during this video, talking to you about thinking about initial stop loss, thinking about what is probable reward based on the previous character of stock, using the 20-day ADR percentage as an initial risk metric. Now, PLTR does then reverse later on in the session, but this is where it can be dangerous because you're like, well, I could have just held it down here and then I would have been back to break even and had a profit. That's very, very dangerous thinking. Okay, very dangerous thinking. But what I want to emphasize here on the PLTR is think about what you're seeing from a supply and demand perspective, okay, with that first 5-minute candlestick relative to other ones that we have seen, okay. AV, so this is an earnings gap here. Now, I didn't trade this one. I did a member Q&A video on how to quickly scan for earnings gappers on TradingView in the pre and post market. And during that video, here you go, here's me talking about it. Here you can see it's 4 a.m. Eastern Standard Time, and this is 15 minutes when the 15 minutes into the into the session when it had opened. This is the post market reaction there, and then this is the pre market when it just opened up. So I was around 9 a.m. 9:11 a.m. my time in the morning. So that would then be 4:11:57 in Eastern Standard Time, New York time. I don't know why I'm telling you about time so much, but anyway, just say it was on my radar. I was looking at it and did a Q&A video. You can go and watch that on my platform if you wanna see where I was teaching you how to quickly scan for earnings gappers on TradingView. It's there in the Q&A videos, right? So this one here, okay. So what's happening here is it's an earnings gap and it's coming out of a large base. So it's always good when the stock is in an uptrend and it's then breaking out of a large base and above all key moving averages. Why? Because then there is limited overhead supply. So what you'd really like is a stock doing this into all-time high territory coming out of a big base. That would be really, really good, right? But you can see here, so it gapped up and you know it's now going to push up, okay? But we're going to distill it down and go into the 5-minute chart. So something to look for on earnings gappers is the technical action of the stocks, ideally coming out of a big base, 52-week highs, all-time highs. What you can also look at in terms of the fundamentals is what did the company say, and was there a big surprise potentially on the earnings side of things or the revenue side of things? So on the earnings side, there was a surprise of 92%. The estimate was for 32 cents and the company reported 63 cents. So potentially catching the market a little bit off guard, and maybe the company also increases their forward guidance for the years and say, actually, do you know, in Q3 and Q4, we're going to blow those estimates out of the water. Maybe they say that, maybe they don't say that, okay? But so it's breaking out of this big base here, 143.99 would be the prior high. Now we're going to do this on the 5-minute chart. So it gaps up, okay bar, right? Similar-ish to a doji, but a little bit stronger than a doji. So if you're thinking about the initial risk here, okay, through the high, stop underneath the low. Initial stop loss is going to be $4.85, which is about 3.13% versus the 20-day ADR percentage. It's okay. It's not great. It's not like half to 2/3. It's okay. Still, an earnings gap with initial stop loss of 3% is okay. This is one though where you could be studying the previous character of the stock. It actually looks like a pretty choppy stock. It doesn't look like it's going to be a fantastic stock for kind of trending high. That's something that you want to be assessing, and ideally you want to do that ahead of time. If you're trying to do that analysis to understand how far the stock may go, and you're then looking over here at like the 1-minute chart, the 5-minute chart for an ORB, okay, you may be putting a little bit too much on your plate. Okay, so you've got to kind of think about your process here in terms of the identification. What is the logical steps that you are taking to reach the conclusion whether or not you want to be taking a trade? Really break it down, dissect it, distill it, okay? So this is what it would look like. And then your free roll target can be here. It could be 1/3 at 2 times the initial stop loss at 164.66, or here 159.81 if you want to take half off, okay? So like that, and then out it goes. And then we play it forward, and then you can see what happened during the rest of the session, and then the gap up during the next session, okay? So your entry is then down here. So this is then where you are positioning yourself down here at 154.96, something like that. You're going to get a little bit of slippage, okay? But then you're trying to sit and let the trend play out, or however you think is best to be optimizing the profits. Let's go for another earnings gap up, which is the recent one in NVIDIA. So you can see what happens over here, okay? So NVIDIA sitting on its 21-day EMA, then gaps up here on its earnings. In terms of the earnings, surprise at 12%, surprise at 8% on the revenue. So it gaps up here. So we're going to look at this. This would be an ORB on the 5-minute chart. So this is the gap up here, okay? The prior session high was $688.88, okay? So it gaps up above that, also gaps up above these recent highs. So NVIDIA is actually gapping into all-time high territory. Gaps into all-time high territory, or stop moving into all-time all-time high territory, it's never going to be a negative in my book. Okay, so it's gapping up like this. Okay, taking out these highs. So let's now zoom in. So how would you be planning the trade out? Hopefully it's now becoming a little bit familiar. I don't think this is kind of rocket science, but you are going to have to think about how does this fit in with kind of your daily process. So your initial risk on the trade, you get perfect execution. Again, the more liquid the stock, more probable that you're going to get good execution on it, right? So NVIDIA, very liquid stock indeed. $18.51 risk per share. That equates to 2.43% in terms of a percentage risk versus an ADR of 3.54%. It's around about 2/3. Okay, it's okay. So you're going in with arguably the institutional stock with initial stop of about 2.5% on an earnings gap. Favorable, not favorable. You've got to decide that for yourself. What do you think is the probable move? What do you think is the realistic reward here relative to the risk that you are taking? Do you think it's good? Do you think it's not good? That's a conclusion you're going to have to reach by yourself. So then your free roll targets. Okay, if you were to go here like this, so then your free roll targets, if we move this down to 151, let's get this lined up like this. So if you then want to be free rolling at say 1 times the initial stop loss, okay, you're looking, your free roll target is then going to be here. So we can put that in if you want. So we can have our free roll target, so T for half the position at 77922. So that's going to be $18.51 gain per share. Then that cancels out, assuming perfect execution, the remaining shares stop loss of $18.51. So the profit from what's been locked in at $18.51 cancels out the loss on the remaining half of the shares. That's how it works. Okay, so we'll play this one forward. So your entry is going to be here. Okay, you got to be a little bit patient. It's okay. Opens on the low, pushes up. So that's going to be your entry bar there. And then around about, let's see, back there, what's that, half an hour later or so, there you go, you've then been able to free roll the trade, and your stop loss is then low of the earnings gap up day at $742.20-ish. Okay, so now you're in, you still have half of your position, and you've been able to free roll the trade. Sit and let the trend play out. What are you going to use? 10 day, 21 day? So this is where you go and you assess the stock and you go, okay, when NVIDIA wants to break and trend higher, what do I think is going to be optimal here? Do I think it's 21 day? Do I think it's 10? Do I think it's 50? Do I want to have it split up my remaining shares and go like, okay, I'm going to do a third for 10 day MA, 21 day MA, 50 day. Maybe you want to go in half and half. So then you go quarter of your overall position. Okay, I'm going to keep a quarter back as a trading stock for the 10 and a quarter for the 21. You've got to assess the character of the stock to reach those conclusions. Okay, what do you think is going to be the best moving average as a trading stock for this specific stock? Because stocks move differently. They are different. They have different behavioral characteristics. It sounds a little bit woo-woo, but when you study the stocks like that, you will see that different stocks behave differently. Let me show you Uber. So this is going to be the last one here. Okay, so Uber, I have a long position at the time of filming it. I was buying it down here, and then I was adding here. I also should have added here, but I still have a position here. I'm actually looking for it to kind of tighten up, set around the 10 day or 21 day. But here, okay, we're going to be looking at this bar here, which is a gap up, but it's not a gap up on the earnings, this one. Okay, this is a gap up on the announcement of a share buyback program for up to $7 billion, as far as I'm aware. Okay, so that's the news here. So it doesn't have to be earnings, it could be news on the stock as well coming out. Okay, so you want to be aware of that. Was it earnings? Was it news? If it was news, what was the news? If it was earnings, what are the earnings that I see? Is it the stock has just come out and they've just blown estimates out of the water? They're raising their full year guidance, things like that. Okay, you want to be aware of that. So Uber here gaps up on this bar here, sorry, so it gaps up, opens on the low, pushes up. We can kind of see that on the daily chart, but if you were doing an ORB on the 1 minute chart, how would you be looking at this? So again, we're looking at this bar here. Okay, let me put in maybe like the prior session's high, which is going to be 69.55. Okay, so it gaps up. First 1 minute candlestick looks good, right? Gaps up, opens on the low of the bar, closes pretty strong, good relative volume coming through. You want to go and take a take a look on terms of the dollar volume. What we've got, just like 2.2 million shares traded, and if we take an average price of say $75 roughly, so $75, so the dollar volume in the first 1 minute of Uber on that announcement of a share buyback program is $165 million circa worth of stock are traded. And what do you think there is? Do you think there's a lot of demand for this stock or not? I'd say there's a lot of demand. Gap up, okay, gaps above these recent highs as well, opens pretty much near the low, closes strong as well. So then if you were targeting this with an ORB on the 1 minute chart, you'd be like this, target through 75.94, initial stop at 74.42. Let's take a look at the initial risk there. That's going to be $1.52, 2% off an ADR of 3%. It's around about 2/3, isn't it? Become perfectly 2/3. So this one here, favorable, not favorable? No, it's probably favorable. We can look at how do we think Uber is going to trend as well. Do we think 2% initial stop relative to the potential reward is favorable or not favorable? That's a conclusion you're going to have to reach for yourself. Then our free roll target could be up here at 77.45. So what we could do is we could say, okay, we want to take half the position off. to free roll, so that's going to be at 77.45, and then we're going to look to target it through 75.94. Now again, you're going to get slippage when you're doing this, so as much as it looks easy in these videos like this, it's not that easy. Okay, you're going to get slippage, okay, emotions are going to be going as well, so again, you're going to kind of be thinking about that. I mean, make it look easy in these videos, not going to be that easy. And then 2 minutes later, you actually get stopped out. So you get stopped out with this shakeout demand tail for a 2% loss. Now maybe you can assess it and go, yeah, maybe I get knocked out on the 1 minute chart, it resets on the 5 minute chart or the 15 minute chart or the half an hour chart, whatever your kind of preferred time frame is for an ORB. But this will happen. We get stopped out, maybe it resets, maybe it doesn't reset. Uber then kind of resets and goes much later in the session, so maybe you then kind of switch it up and go, yeah, 15 minute chart, I'll buy it back when it starts moving through the high, and then my initial risk on the trade, so then it'd be like this, so then we kind of pull it up like that, you buy it back, and then your initial stop loss closer to 3%. Do you think that's favorable? Do you not think it's favorable? So again, you kind of got to adapt. You are going to get stopped out. There will then be opportunities sometimes to buy it back as well. But anyway, guys, hopefully that there was a useful video for you in terms of thinking about opening range breakouts, think about whether it meets your or fits your personality, thinking about whether kind of how your days are structured as well is suited for opening range breakout. As I said, I think you've got to be looking at your screens, certainly in the early part of the session. Maybe that's the first half an hour of the session if you're thinking about an opening range breakout entry method technique. Again, alternatives to that, I say buy stop limit orders, where you can kind of plan and define your risk as well. So there are pros and cons to all order entry methods. I really hope you've enjoyed that video. If you made it all the way to the end of this video and want more videos like this, please do consider subscribing to the channel. If you turn on the notification and try and release a video like this every single week, then you'll be notified. So thank you very much for watching. I look forward to seeing you in a future video.